It's half-time for the second quarter earnings season after stunning results for big tech last week. But weak macroeconomic data and concerns over the course of the pandemic are weighing on Treasury yields. Stocks on Wall Street ended high on Friday, with the major averages wrapping up their fourth straight monthly growth due to an ongoing stimulus from the Federal Reserve. The S&P 500 closed at the level of 3,271.12 on Friday. It added 1.73% for the week. According to data provided by Reuters, 45% of the companies in the S&P 500 have reported results, with 81% of them beating analyst consensus estimates. New record highs are likely to be made by indices such as the S&P 500 and FTSE 10. The Dow gained 2.3% in July. On Friday, it added 0.44% to close the week at 26,428.32. Week on week, the Dow Jones Industrial Average declined by 0.2%. The Dow slide could be explained by faltering economic data and a resurgence in coronavirus cases. Many shares have rebounded after the recent stock market crash, and yet in part thanks to some blockbuster earnings from such companies as Apple and Amazon, Facebook and Google, the tone of trading was positive. Meantime, the tech-heavy NASDAQ Composite Index opened Monday at 10,536.27 and increased by 3.7% week-on-week. It ended the Friday session at 10,745.28. During the month of July, NASDAQ surged 6.8%, powered by mega-cap technology companies, which beat expectations in their latest earnings reports last week. Analysts consider that now the focus will turn to politics, like the U.S. new fiscal spending package and unemployment supplement. Here are three stocks to monitor during the upcoming week. Walt Disney shares closed at 116.94, showing some growth at the end of the week. However, the weekly decline equaled 0.6%. The Walt Disney Company reports earnings for the fiscal 2020 third quarter on Tuesday. Its core business is suffering after the global spread of COVID-19 forced the closure of its theme parks, resorts, movie theaters, and cruises worldwide. Thus, Disney reported a $1.4 billion shortfall in its operating income for the first quarter. Shares of the entertainment giant have fallen 19% this year, closing at $116.94 on Friday. The stock is gradually recovering from its March dip, fueled by hopes of a quick rebound for Disney's business once the pandemic is over. Uber Technologies is scheduled to report second quarter earnings on Thursday after the market close. Uber shares have more than doubled since their March lows, closing on Friday at $30.26, helped by the company's diversified business model and cost-cutting efforts. On the weekly basis, they slid by 2.95%. According to analyst forecast, Uber will announce a loss of 8 cents a share on sales of $2.9 billion. In May, Uber announced a series of moves to trim costs, including ending food delivery operations in more than a half-dozen countries. Uber Eats gross bookings surged 52% from last year's first quarter to $4.68 billion. After President Donald Trump said he was considering steps to ban TikTok from the U.S., Microsoft's efforts to acquire the U.S. operations of the app owned by Chinese company will be in focus this coming week. The shares added 0.5% on Friday to show the session close price of $205.01. The weekly growth was as high as 2%. After the president's announcement, negotiations were on hold as the companies want to know the opinion of Washington. For Microsoft, buying TikTok, launched in 2017, could reshape a tech giant that has lately thrived by focusing on corporate customers. You've watched Weekly Financial Review on InstaTV with me, Anna Kasatkina. Subscribe to our YouTube channel to keep track of the latest news from the financial markets. Stay tuned.